we had kept growing at the rate we were in the 50s and 60s through the 70s, 80s, 90s, 2000, we'd be like 10 times richer than we are right now. There's a huge cost to lower growth.
1, 2, 3, 4.
Hey there. Ever feel like the world is spinning out of control? Welcome to the New Rules with Alan Pentz. Forget the old playbook. It's toast. We're in a new game now, and this is Alan Pentz bringing you 25 years of experience from Capitol Hill to the forefront of business innovation. We're here to show you how to navigate this chaos with precision. Whether it's superpowers jockeying for dominance or inflation shaking things up, we'll help you play 4D chess while everyone else is stuck on checkers. Subscribe now and let's dive in together to master the new rules of the game.
All right, we are back again. Tonya is back in San Cugat, and I am on out of the basement in Chevy Chase onto the first floor today. So
right.
It's very
so is
special
this an upgrade for you, Alan, to be out of the basement?
This is an upgrade, but I don't want to go all the way up to the top floor. I want to stay right here. So
yeah,
I should have gone to my office today, but next time I will try to get to the office.
And today it's later. You have no excuse.
I know. Usually Tonya makes me do it early because she's usually 6 hours ahead.
Right.
And I don't get to the office by then. But today I have no excuse.
No
so given
excuse.
I have no excuse, what are we talking about today?
Well, you've been very prolific in the past week and a half, but most recently you were talking about the safety trap.
Yes.
I really like this. So let's talk about the safety trap. Safetyism. Yes, it made me think about all sorts of things, especially living here in Europe. And
oh, interesting. What did it trigger for you about Europe?
Well, you were talking about safety and how we're so obsessed with safety in the US. And it just made, it's a benign comparison. It's not nearly as deep as what you get into, but here in Europe, they're not as concerned with safety. Like you see like little kids rolling around at 100 miles an hour, like can't even walk yet. And they're on, scooters and bikes and,
juggling
things
knives.
Yeah, exactly. Yeah. Like eating fire. Have you ever seen like the castells, like the human castells in Catalonia? Oh my gosh. We'll have to talk about that next time. I don't want to take up a lot of the time, but they're human castles that can get up to like 6 floors high.
Oh my gosh. I think I've heard of that. Yes. Crazy.
I'll send you a link.
Yeah, I think we all kind of know that kind of safetyism, right? But I think what hit for me was this tweet, I think it was a piece by Richard Hanania, the writer, conservative writer, just about relating our push to get to Mars and then looking at the other things in our society that we worry about so much. And saying, yeah, exactly. He was talking about specifically, we're all concerned about, young people gambling on sports, and like we're obsessed with stopping that because we don't want them to harm themselves. And he's sort of like, why do we care about this? Like, this is why we're not getting to Mars, because like we're so focused on these small harms that like think about if some spaceship blows up, which definitely is something that could happen. Like we're just going to stop everything, right? And so I guess my take was going back and kind of relating it back to the new rules and thinking, I think it does require a certain forcing function for, I don't know if it's just Americans or humans in general. Obviously, Spanish people are less litigious and less worried about safetyism. But Americans are particularly bad. And I think that has lots of, maybe we are more litigious and that's part of it. But, from the end of the Cold War to, the pandemic, I think, I'm saying, hey, we've been asleep, right? We've had this long period where we were so powerful, we didn't have to worry about consequences and we could do whatever we wanted, essentially, as a country. But I think that also lent itself to safetyism. And additionally, I highlighted Tyler Cowen's work on the Great Stagnation, where he looks at how what they call total factor productivity, but basically how most core technologies that had helped grow the country for years, like electricity and and computers, and we also had open land, and we had all these different things and we had mass immigration, and these like really drove the growth of the country, and they had kind of petered out by the 70s. They were still good, but they weren't creating more and more growth, and that no other kind of general purpose technologies or other things like large open land was there. So we started to stagnate. And, I've mentioned that website, What the Fuck Happened in 1971,
That's right.
WTF 1971. And it shows like all these stats, like energy use, productivity, growth, everything kind of stagnating, going sideways instead of going up as it had before. And I think I saw something yesterday that if we had kept growing at the rate we were in the 50s and 60s through the 70s, 80s, 90s, 2000s, we'd be like 10 times richer than we are right now, right? So that there's a huge cost to lower growth. And in a certain way, you think about all that growth we had, like we did have a spaceship blow up when we were trying to get to the moon, right?
Yeah.
And we did have lots of accidents. We tolerated that kind of thing in the past. So why is that? And one of my contentions is that it was really competition with the Soviets that drove us. Like we were so afraid of losing to them that we were willing to take risks today. So it is that competition and that threat that keeps us from being stagnant and drives us forward, right? So I think, as Tyler Cowen said, he recently came out, he's an economist at the Mercatus Center, came out and said, hey, maybe the great stagnation is over, because in response to the pandemic, we created a whole new technology platform of mRNA vaccines, right? And we're able to get a vaccine that was supposedly going to take 10 years out in a year, and which is an incredible miracle.
It really is, when you think about it. It's incredible.
It's unbelievable. Despite all the nonsense about vaccines, it did save millions of lives, particularly early in the pandemic, right? And now I just saw there's like a couple of cancer vaccines based on mRNA coming out. You also have the rise of AI now, which seems to be like a really transformational technology. You hear nuclear being revived. We're continuing to make progress on solar. So maybe we're going to start using energy more to produce more. And then we can make that energy greener and greener and cheaper. Maybe we're coming out of this age of stagnation with these large, general purpose technologies coming back and driving growth. And like what might have done that is, one, a catastrophe the size of the pandemic where we shut down the entire world. So it was worth it to kind of try, hey, let's do an untested, vaccine technology because the entire world shut down. So it's worth it.
Yeah, the stakes are so high.
Right. And then, hey, look, like now China's the enemy, right, of the United States, or at least a sharp competitor, right? So, hey, we're not going to let AI languish. We're not going to regulate it or else we'll lose to the Chinese. So our fear of losing on the key, technology of the future is going to prevent us from regulating it out of existence. And I think without that threat, we would have done two things. One is, I think we would have done like the EU and passed some silly regulatory bill before the technology, we even knew what the technology was, right? Like the EU AI Act that was passed last year or beginning of this year. And then two is, I think what we're seeing is this massive demand for electricity to run AI inference, which is basically when you ask the AI a question, it's inferring the answer, right? And that every time you ask an AI like Perplexity or ChatGPT, it costs 10 times the amount of electricity to answer your question than it does to do a Google query. So they're talking about needing to increase energy capacity. And actually, I'm doing some research for a piece on this, how much that's actually going to be. And there are lots of estimates out there, but it's a lot, right? And we haven't done much more than keep up with 1 to 2% electricity capacity growth for the last 50 years. So I think that the threat of losing AI, we already passed the CHIPS Act, right? So one limiting factor is I don't have enough GPU chips to train and and infer on my models. Two is I don't have enough electricity to actually run all the inference at mass scale if I release these models to these most advanced models to the public. And so that could severely hold back the integration of AI across the economy. And so like in the threat of losing to the Chinese on that, we might actually break through the environmental stranglehold on regulatory and permitting to start building more energy and electricity capacity. And so I think it is not just the availability of these technologies that creates the circumstance. I think there has to be some other forcing function, be that a major worldwide crisis like COVID and or like a competition like we have with China. And they have to be pretty severe, I think, to get people off their ass.
Big conflict.
Like we had a conflict with the Soviets where you can argue, yes, we fought proxy wars, but there wasn't a huge, world war. So hopefully it doesn't require that, but it requires like a pretty existential conflict, right? Like we were locked in a struggle for either we were going to survive or they were going to survive, or we were going out or they were going out, right? And so I think that's kind of a similar thing that we're locked in with the Chinese Communist Party, at least. And so I think that will drive a lot of beneficial change. Well, yes, acknowledging I'm not like celebrating the risk, right? It's an unfortunate reality that human beings are prone to, I guess that's the other part of the argument, right? They're prone to status quo and fearing the future.
Unless there's something overwhelmingly threatening, a conflict, a catastrophe.
Right.
Today. Or as you say, another one, what was it? Low-hanging fruit?
Yeah. Like I think the low-hanging fruit is so that's something that Cowan talked about in that Great Stagnation. And he talked about, having a vast country like the United States that was, unsettled. I mean, obviously there were Native Americans there, and we can debate, how terrible the genocide and all that kind of stuff. But the reality is the cost of settlers pushing out and clearing the land was pretty low overall, right? So, but it was just so obvious to go take that land and settle it, right? It was almost, you couldn't hold people back. And in fact, Britain tried to hold the colonists back, and that was one of the reasons we had a revolution, trying to keep the colonists east of the Appalachians. And so I just think like low-hanging fruit like that, if it's sitting there, people are going to run and go take it. And that can be another, impetus to growth. But I just don't see that, that existed in 1800 or 1850, but I don't see anything that looks like that today that I can think of, where I'm like, oh, this is like in that case, we didn't need a conflict to settle the West, right? Because it was just so obvious that it was worth it to take it. But I don't see anything on the horizon like that for us now. So it's largely going to be through these conflicts and crises that we get real progress.
So it's as you say, it's not something, nobody wants conflict, right? Nobody wants these kind of things. But the flip side of it is it may be what is going to propel us forward.
Yeah, exactly. What does it say about us as humans? Like, we're fearful little animals that are worried about our little pie. And if there's no threat in the present, then we will view the threat as the future, and we don't want the future to come. And, I cite the other book is Virginia Postrel's The Future and Its Enemies. Yeah. It's a good, it's dated a little bit. It was written back in 1999. But again, she kind of makes some similar points that like people kind of hate the future. And if you look at sci-fi, right, a lot of people have pointed this out recently, like Noah Smith and a couple others, like and Elon said this, the future in sci-fi movies looks like a dystopia, right? It's all Terminator or something where the robots have taken over or we've destroyed the world, like it's never like, hey, the future is awesome, right? It's so much better than today, which, to be honest, for the last couple thousand years, You could argue about the Dark Ages, blah, blah, blah. But, for a
But
long, long time, the future has always been better than the past. Right?
there's a show on Netflix now. Have you seen it, called The Uglies?
No, I haven't seen that.
It's not an Emmy winner or anything, but it's interesting.
I don't think anything is on Netflix.
Right, but young people are all, when they reach a certain age, I don't know whether it's 16, they go someplace within the society in the future that they live, and everybody is made perfect. So all of their features, so of course, in that really makes everybody look the same, right? But it has.
So
I
it
won't
is
give
dystopian.
It away. Yes,
Right,
I won't give it away, but it's
okay. I'll have to
also
check it
set
out.
in the future.
Right. I guess if the future were like perfect and you were the plot, you wouldn't have much of a plot, right? It would. Although I guess you could say you could set it in a nice future where there is a plot that has nothing to do with the fact that the future is awesome, right? So that's what I would prefer. And yeah, I mean, I just think we have these inbuilt tendencies, and so like when I was thinking about this problem, I was thinking like, why do we not have more progress? And I guess the question is, why do we have any progress at all? Like, if we're so scared of the future and we don't like taking risks, and like I also say in the piece, like the other thing is like like if you looked at AI today, right, or that might not be good. AI is kind of there now, but if you had looked at other technologies where people are worried about their jobs getting taken away, or they're worried about this outcome or that outcome, one of the problems is that the interests that want to protect their jobs or the status quo are at the table. They have interest right now.
It's now.
And in many cases, the future has nobody at the table because it's nobody's interest yet. Now, I think you've got AI companies that, you've got the largest companies in the world now have a huge interest in AI. So it will be at the table. So it's not quite the same at this point now that it's out, the genie's out of the bottle. That's another reason the US didn't regulate, or hasn't yet, the way EU did, is we have a bunch of powerful companies that have a huge interest in this, and Europe has none, right? Maybe Mistral,
Right.
but it's a small company. That's another thing I thought about this too, is like, in general, my case on the EU is there's too much complacency, right? They are stagnant, and there isn't this threat. Like China, to be honest, I don't think Europe really looks at China as a threat, because if we get into a war, it's going to be US, China, and allies in the Pacific fighting with the US. It's not going to be Europe. So I don't think Europe really views China as that much of a threat. Maybe an economic threat now, they should, but not as a military threat. So I think for them, like the impetus to let AI go forward, first, they don't have the big companies that are at the table that can make the case, and two, they don't have the forcing function of the threat of losing.
And you think that if something did happen with China, they would just look to us to help out.
Right. I mean, I think they've become so dependent, and that's another theme I want to explore going forward, is actually, I think that's not going to stay, because I was looking the other day at the debt to GDP ratios of France and Germany. So these are the two
powerhouses,
pillars of the EU, right? They started the coal union back in the 40s or 50s, and that evolved into the EU. So I mean, it's around, the EU circles around these two countries, right?
Right.
And if you look at their debt to GDP total, I think it's like all private sector plus public sector debt to GDP. France is 350, something like 350%. I mean, high. Germany's like 220. So, like when we were talking about last week creating a common debt market in the EU, this is why Germany won't do it, because they would be combining their 220 debt to GDP much better than the 350. So, and then the strategy to deal with your issues going forward are completely opposite, right? So like what Germany needs to do is actually raise its debt to GDP, because its economy is falling apart due to a lack of investment. What France needs to do is get inflation so it can inflate away the debt to GDP ratio, right? And so they are at opposite polar fiscal policy or monetary policies and fiscal policies going forward. France needs to probably just chill out and keep spending down. Germany needs to go up, right? So I just don't see these
It's not going to happen.
Right. And they're going to break. I think that the EU breaks on that, right? And like, it doesn't mean that the EU goes away completely, but I think I think it'll remain a free trade area, and there'll be like policy coordination bodies. But I think the effective power of the institution is declining and will continue to.
But how long term are we talking for this to happen? Like in Europe, I know you're just opining.
Yeah, it's tough to say. Like, I think that there's a big part, and I'm totally speculating here, right? So
right, yeah.
I think there's a big part to play in how the US approaches China, right? So I also note that I noted in some piece, or maybe it was just on Twitter, you know, Germany, until recently, the bag on Germany was that it was dependent on Russia for energy, China for trade, and the US for defense, right? And now it's dependent on the US for all three of those things. And trade from Europe, I haven't looked at the German figures, to the US is way up. And, you know, obviously exports of liquid natural gas to the EU is way up. And it's hard to tell with Germany because they ship stuff in the Netherlands and then pipe it over, so you don't know exactly what went where. But it's clear like the US was a key swing supplier to replace the Russians, in addition to coal and some other things. But that doesn't strike me, you know, and then relying on the US as your key trade partner right at the era. First of all, Germany is almost as bad as China on the export surplus and their lack of adjustment of their economy. So you're going to go start depending on the United States right at the time when the United States is getting into the tariff business. So I wonder.
You mean to buy German products?
Right. So they're exporting a lot. Some of that could be China re-exporting through Germany, right, and stuff like that. But you know, you're not going to adjust your economy. You're just going to switch your exports from China to the US. That strikes me as a pretty bad policy, pretty bad bet. I mean, Trump comes in, it's a terrible bet. If Kamala comes in, it's still a bad bet, right? I don't think there's, you know, the degree of tariffs is only a degree difference, not a kind difference between the two parties here. And I just think like the US isn't going to tolerate that. Now, I think the thing that could keep it going is if the US says, we are shutting out China, we are going to allow our allies, and I kind of wrote about this in the other pieces I did. We are going to allow our other allies like Japan, South Korea, Germany, who are export-driven countries or manufacturing-driven countries as well, to continue to export to the United States in an imbalanced way in order to get them on our side to shut out China. That could keep Germany going for a while. Now, I think that would be really tough. I mean, Germany has set up decades of cooperation with China and joint ventures in China. So like, I don't know, maybe that bet would just be like devastating to Germany. I also find it unlikely that the US, because like Germany up till now, they have had an export-driven surplus, but most of their exports have gone to the EU. I mean, some to the United States, but a lot of them have gone to China and the EU, right? So like, it wasn't like Germany was the big problem for the US. I mean, the whole system is interconnected, so it is in a way, but it wasn't direct the way it was with China. So I think that once, you know, if Germany somehow was able to realign its exports to the United States, there's going to be all sorts of complaints here about them. And then, you know, I think what's interesting about the way the US has dealt with other partners in the past, like we had a big problem with Japan as well back in the 80s, and we forced this agreement called the Plaza Accords, where they had to appreciate the yen because they were keeping the yen really low against the dollar for years and exporting the United States. We got sick of it, and we called them in and said, hey, you still want to be under a defense umbrella? You're going to appreciate the yen. And
they had no choice.
They had no choice, right? Now, what
Right.
happened is a huge bubble in Japan as the yen went up and all these assets went up, and then
Mhm.
it burst. And then Japan had 3 decades of no growth. Now, to be honest, what was happening is Japanese consumers were starting to benefit at the expense of Japanese corporates as a result of all that.
Mhm.
And they were able to import more because they had a stronger yen. And so they actually, the average Japanese person was better off. So it wasn't like it didn't destroy Japan.
But the average
Yeah,
Japanese citizen, you're definitely better off, you're saying, than the average Chinese citizen.
right, exactly. And so, but the U.S. can't inflict that kind of agreement on China, because they're not under our security umbrella. But if Germany becomes dependent on the United States, we could do that, right? We could
Mhm.
force them to appreciate the euro. So I don't know. We might try that. It seems unlikely to me.
Mhm.
But if that happened, if we allowed Germany to continue to export to us and kind of let that adjust so that but forcing China out of the system, maybe Germany could keep going. But without that, it would strike me within the decade that this imbalance between France and Germany is going to cause another crisis, which to me in the end is going to cause some sort of rupture. You might not see like a formal end of the EU, but I think it will
Mhm.
mark the end of the integration. They'll start pursuing independent policies, as I think you're already starting to see the signs now that they are.
So yes, we've veered off here, right?
Yeah, a little bit. Yeah, it's
No,
all
no, it's not.
interconnected. It's all
Yeah, no, it's all
one big thing.
interconnected. But we're talking. Okay, what could we do to bring China under control? You're basically talking about starting a whole new access, which you talked about a couple of weeks ago, like a
Right.
whole new trading
Trading
access.
system. Right.
But then at the same time, we don't. We need China. We need the conflict so that we can progress.
That's right.
Is what
Yeah,
you're
but we
saying.
can have. I mean, we conducted a separate trade system from the Soviet Union and still had the
That is
competition.
true.
So I
That
think
is true.
those things can coexist. Yeah, so I think that's where we're headed. I mean, I do think the current dynamic can't keep going.
Mm-hmm.
So there are going to be some cataclysmic shifts over the next decade. And like, if we come in and put 60% tariffs all over the world, it's going to happen fast. If it's gradual, it'll happen more slowly, but you're going to see Europe's really stuck in a bad position right now. And
Mm.
if German degrowth continues, I don't know, I heard someone last week speculating whether, and actually they were saying that some of the southern European countries actually, I don't know if it's Spain, I haven't looked at their growth
Like,
rates, but saying the growth rates are better in Southern Europe now. And so, like, is Southern Europe going to have to bail Germany out of its stupid energy and degrowth policies at some point?
well, who would have thought? That's interesting. We
Yeah,
should look into that a little bit more.
yeah. Actually, there was somebody on. I think it was. Oh God, I can't remember who I was corresponding with on Twitter about it. Somebody like Brad Setzer or somebody, and
Mm-hmm.
I was like, well, who's going to be the Spanish Wolfgang Schäuble? Who's going to
The Spanish
during
who?
Wolfgang Schäuble? So during the 2012 Euro crisis, the German
Mm.
finance minister, that was
Oh,
during the Greek
yes.
debt crisis. He
Yep.
was this like really stern looking guy, Wolfgang Schäuble, and he was the guy saying nine to the Greeks about bailing them out, right? And he was like the total image of like German austerity. Will there be a Spanish no, person who's like, no, Germany, you can't. We're not going to bail you out of your stupid energy policies. But anyway,
Spain is not Germany, right? A lot of other energy options. I shouldn't say a lot, but there's more there
yeah,
than the
solar
Germans
probably
have.
worked there, right? So
Absolutely. I mean, solar works well here.
yeah, and I'm
I
working
don't
on
have
a post
statistics, but
on that. Actually, I want to do it more on like the energy solution. But my daughter in college went and visited these nuclear plants. She's like all into nuclear
did
power and
she?
policy. Yeah, so they went and saw this Georgia Power nuclear plant. I can't remember the name of it. And it's interesting. She was saying that on that site they have 4 reactors, and they produce 2,100 megawatts of power, which is a lot. It fuels Atlanta, right? Powers Atlanta.
Right.
But then they drove down the road and went to a solar site, the exact same surface area as the nuclear site, 2.1 megawatts. So it's like 1,000 times less. It's like just showing that solar at current levels is just not scalable to these massive energy needs. If you're talking about rapid increases, of course we should use solar. And eventually there might come a day where solar is cheap enough, and maybe storage gets cheap enough that you can get solar when the sun is shining and preserve it for long periods of time. But it's just showing that, like, we're talking 1,000-time difference in the production capabilities of a facility. Now, we could also say there's going to be a much shorter time to build that solar facility than the nuclear, but that's true as well. So but I kind of want to talk about, like, where is this energy going to come from, and what are the limiting factors we have going forward.
And so you're doing research on that now?
Yeah, right now. Yeah, it's interesting. It's sort of like, I think the answer is going to be there's good long-term solutions, and in the near term, you're just going to have to use natural gas. That's the only option, essentially.
I bet a lot of people don't want to hear that.
They don't want to hear that, no, because but I just we have so much natural gas. It's so abundant. It's so cheap. It's so easy to build. It just doesn't strike me like solar is not going to get there in 3 or 4 years. It's not going to be scalable. And nuclear, even if now there are these small nuclear reactors that they think they can make in a factory eventually. But again, we're not doing that today, right? We're not deploying them. So it strikes me that all these things are like a decade off. And even if we started building whatever the latest nuclear reactor, it's going to take, again, if we get these small ones, it could be faster. But these big ones still going to be 5 years that's in China, 5 years, right? Here it's going to be 10.
Right. But what about reinvesting or, sort of rehabbing existing?
Of course, we have to do that, but that's not going to increase our electricity power, just maintain it. Right. So we need to increase. And the only short term, I think, based on my research, the only short term thing we're going to be able to do is gas. So wind and solar just can't scale to the level that they need.
Not where we are now. Certainly not.
And I think that's going to create a huge problem for what, these large AI companies and the people powering them. They call them the hyperscalers, right? The Microsofts, the Googles, and Metas, and to some extent Apple, right? Like, they have pledged to go net zero on emissions. They did that before this whole AI thing came up. And as I understand it, that they made those in SEC filings to the Securities and Exchange Commission. So they are at some risk. If they don't hit those goals, they can be sued for investment fraud, right? And so I think they're pretty dedicated to trying to do that, but I don't see how they capture AI and do that at the same time. They're trying to bend over backwards. That's why they love nuclear, right? Because it's net zero.
Didn't Microsoft buy or buy into a defunct nuclear plant?
Yeah, so they did a deal with Constellation Energy to restart Three Mile Island, in Pennsylvania. So that's on the docket. And then there was some word about Amazon trying to invest in some nuclear projects. There was I think some of it was like, hey, if you do this, we'll do this, but it wasn't a direct investment. So there's a lot of talk about it. A lot of it's press releases. So it's kind of, I don't usually want to write about a press release because it's kind of hard to know what they're actually talking about.
Right.
But yeah, I certainly think that they are highly motivated to find renewable sources of energy. And certainly they're going to try to locate near where it's easy to get the geothermal. They're going to locate near, being in Phoenix will be great for solar. But the reality is, I don't think there's anything they can do if they want to continue to advance in AI. I think they'll probably take the shareholder lawsuits to keep it AI, right? So they're going to burn natural gas. That's what's going to happen. And I think that we all just have to look in the mirror and realize that's what's going to happen, because there's just no other alternative in the near term. And what are you going to wait 5-10 years for AI and let the Chinese develop the next level of weapon
Mhm.
systems and economy, and we're all vassal state to the Chinese? I don't think so. So
The vassal state.
yeah, I mean that's essentially what we did, right? Europe became a vassal state of the United States, and like we are relatively benign. Some Europeans might not like us
Well,
that much, but
some people might disagree with you. Some would argue.
that's right. That's right. But I think Europe's done pretty well in that, over the last 50 years, but I don't think the experience with China will be quite as pleasant as the one with the United States. So
Yeah.
the US will not accept that status. We'll do whatever we have to do,
No, that is true.
including burning natural gas,
that is
which we
very
have a
true.
lot of, right?
Mhm.
And that
We
just
do.
shows you the other thing, right? Like natural gas here is like, I don't even know what it is right now. It's gone between $3 or whatever the unit is to $7, and it's like 20 in Europe, So obviously people are going to put their AI operations here.
A lot of food for thought, Alan.
Yeah. Yeah. We kind of got off on some speculative stuff there, but
Yeah,
what
but
else
it's
did I write
interesting.
about that we can talk about?
Well, I mean, so you did a podcast with Dean Ball.
Oh yeah,
which
maybe we finish
I
on
don't know
that.
if you want to talk about that. I mean, I thought that was really interesting.
Yeah.
You also wrote about the new investment portfolio according to Alan Pentz.
Yeah.
The 60-40 Boars on the floor.
Boars on the floor. I used the Succession family. There's a famous episode called Boar on the Floor.
I
to
love
talk
that.
about.
Yeah.
Hopefully I was trying to channel.
I don't know how much time we have left to talk about that.
Yeah.
But
maybe we can talk. Maybe we just talk about 60-40 because I think there's some good caveats. So like, yeah, I was writing about how I think that we're going to have, we have this deglobalization, all the stuff we talked about in Europe, breaking with China, it's going to cause inflation, tariffs, right? All of that's going to make prices go up, right? And it's going to be very variable, and it's going to be all over the place. It's going to be kind of messy for the next decade or two. And I think that most investors, they usually have 401ks, retirement accounts here in the United States, or IRAs, and they invest a lot in target date funds, which is basically like pick your age, and then we'll give you, if you're 20, we give you 80% stocks, 20% bonds. And then that gradually moves down as you get older until you get to retirement, because equities are more risky, bonds are, more certain,
stable, but
right?
Less return.
Right. And so what happens though is the killer for bonds is inflation. And we saw that in 2022, where both started to correlate, meaning bonds and stocks started moving together, down and up. And so they both went down in 2022, 17%. And that's the biggest loss, the third biggest loss on record. And I think that we're up for a bunch of those going forward. And even if equities do okay, you look at like the 70s, and like equities, I don't think they made money from 68 till 82, something like that. That you didn't get any gains in equities, and you had negative real returns. After you accounted for inflation, you had negative returns from bonds and treasury bills. So treasury bonds. And so I think there are going to be periods like that going forward. And so I started looking at, I've been looking at it for a long time, but like, what are the other things that can help you when those things happen? And there's basically like, within equities, you can do stuff like value versus emerging markets versus this. And I'll probably go into that another time. But reality is, you want to be in equities, right? They're the main driver. You should have bonds, right? Because there are periods where like just this, I think it was last year, bonds were doing well. Now they're getting killed again. Now they're getting killed right now. I said, like, if you looked at the children of the Roy family, there were like 3 children, right? And each one had a unique ability, like their dad, right? So the dad was this patriarch of a media empire. And so his oldest son is Kendall. And Kendall's like, when the show starts, he's basically like helping run the company. And it seems like he has been for a while. So I kind of call him bonds, because bonds have been the key thing. Like for 40 years, we've had declining interest rates, and bonds, that means low inflation going down.
He seemed like he had his shit together.
He had his shit together, right?
It seemed that way.
For a while, right? So for a long period of time, Kendall was it. He was going to be the successor. Then you find out Kendall's got a drug habit and like is a junkie, right? So he
Yeah.
falls off the wagon, he's toast. So like in the first season, the dad gets a stroke and Kendall has his issues. So like who's going to take over? And so like when they're both out, then you need something else. And that's when you get like his daughter, Siobhan. She's like she has like the political acumen of her father, like the strategy, political acumen. And then there's Roman, who is a total freak, but he's really good with relationships, right? Like, he's crazy, right? But
he's good with people.
He's good with people. And when the CFO the general counsel of the company, Jerry, kind of can get Roman on track, he can help run the company, right? So if you've got equities going bad, like in 22, so Logan's got a stroke, Kendall's on a bender, right?
Yeah.
So
He's
bonds are not doing well. What do you do? Well, you got to turn to Shiv and Rome. And so to me, the candidates for those were, calling Shiv gold, right? So holding gold, which is over the last year has gone up more than the stock market. It's gone up 32% or something like that in the last year. Yeah. And then the other thing I talk about is sort of a version of commodities. And the problem with commodities, so Rome is like commodities, and kind of like Rome, mostly they suck. They're always kind of going down, and they're just volatile, and you don't want to deal with them. But
so you're talking about things like wheat, soy, just like
wheat, soy, basics. Palm oil, gold is a commodity actually too, but it's kind of separated out. But basically, people put these overlays on it of like following the trend. So like they have rules. It's like, hey, if soybeans are above their 200-day moving average, you buy the future. If they're not, you go short. You say, I think the price is going down. And so you use this thing called futures contracts to go long short the commodities. And that way, when it's going down, you still make money because you've got the short end. I mean, I do think that there's a long-term thing in the market where trend works. So we've got 1,000 years of data showing that trend works. So it's gambling in a sense, but it's gambling where the odds are in your favor. So not like going to the casino. It's like being the casino, actually. It's in your favor, right? People have been deploying these strategies for decades. It's just they were all like very high fee, hard to get into kind of hedge funds, right? Normal people didn't have access. And because of ETFs, some companies like Simplify and what's the other big one? There's CAM, LM, DBMF. Those are kind of the ETFs that have come out with more commodities. I mean, the other caveat is, not to get too boring, is you can do futures on anything: stocks, bonds, currencies, commodities, blah, blah, blah. I tend to try to stick to commodities because they're the most uncorrelated with equities and bonds, right? So basically, like the commodities are like Roman. They're mostly a disaster. But if you can get Jerry to take care of them, like putting them in managed futures, you can get them to be productive, right? So like when Logan's down, Kendall's down, you can get you'll see these other things that tend to
bring in
outperform, Jerry. Right? You bring in Jerry and Rome for your managed futures, and you can buy those in ETF form now, and you can bring in gold as Shiv, right? Which are ETFs you can own now, and the reality is those two things have long periods of underperformance. This is why most people don't do them. And two things. One is with managed futures, there weren't these vehicles to own them, right? Until like 5 years ago. And they have long periods of underperformance. So like if you held them from 2015, managed futures from 2015 to 2020, you were not happy. They were down, right? So they do require long holding periods, and it's hard for people to do. Same with gold. Gold was down for like 20 years. So in some ways, I think that they should you should own gold in a managed futures form, but there's no ETF out there that has just gold that follows the trend. So it would go long short. So you just got to hold it or not, right? And sometimes it's going to go down. And then, Bob Elliott, I quote, I think he's the former CIO of one of the largest hedge funds in the world, Bridgewater, said, in about half of equity drawdowns, gold outperforms bonds. About half the time. It's just they're not the ones that we have been used to because they happened back in the 70s and 80s. And but I think we're going back to that kind of era. So if you want to be more diversified and have the whole family at the table, you're going to have to figure out a way to own commodities. Those go up a lot during inflation, but they suck during deflationary periods. So I say managed futures is a solution to that. So it's not as bad and you get the benefit, right? And then, gold is the other thing. It's, in times of geopolitical uncertainty, in times of, but it's hard to know, right? Like somebody asked me what drives gold, and I'm like, oh man, there's like so many things. Cause like theoretically it should be inflation because it's a monetary substitute. So if you're inflating your currency, it's like, hey, I want gold because it'll keep its purchasing power. But right now, inflation's going down and gold's going up. So what's going on? I think there are probably other things like China is trying to diversify its reserve holdings. So they're buying a ton of gold. The other thing is Chinese investors have nothing to buy. Their real estate market's going through the floor. Their stock market sucks. It's only getting juiced by the government because it doesn't really work. And like, they don't really have a lot of options. So they're buying gold because that's the only thing they can buy. So it could be that gold's going up for reasons that have nothing to do with the United States or us or anything, right? So
but it's also complex, Ellen. How
super complex.
How is the average American investor, and I mean people who actually are able and thinking of investing and do invest or have a financial advisor, how is anybody supposed to get their mind? I mean, I have a financial investor. She's never talked about commodities and diversifying. I mean, not in this way, right?
Right. I think two reasons why they haven't done it. One is they kind of believe that most people aren't going to be able to stick it out during the downtimes. So they just like, forget it. I'm not going to even try. Some financial advisors have tried. And the other thing is the newness of the vehicles. So they probably aren't that aware of these new things. So I guess what I say is like, look, it's up to you. I'm telling everybody what I think the reality is going forward. And be clear, I'm not an investment advisor, so go talk to one. I don't think they're worth a damn, but go ahead. And I think that you just got to hold everything, right? And you can't predict what's going to happen. So the way I looked at it is like I try to come in at about 60% equities, and there's a way I divide those up I can talk about in the future, and then hold about 10% to 13% each of treasury bonds, managed futures, and gold. And no guarantees. We could go through another period of deflation and then gold's going to suck. So, and managed futures are going to suck. So like, I don't know, but you don't get the diversification. You don't get the benefits of diversification. You don't hold through the bad times. So it's tough, but I do think the 60-40, I don't know if the outcome is going to be what people want going forward.
Well, it's something to think about. I'm going to have to talk to my advisor.
Yeah, you should ask her about, hey, I hear that inflation's going up. What about gold and managed futures? She'll be like, what? Be like, those are too complicated.
She'll be like, my internet's going out. Let's reschedule.
Yeah, I think they're going to say they're too complicated. And I think the reality is probably for most people they are. But part of my newsletter is to tell people about the things that are going on, and what the trends are. And like some of them are going to be beyond people's ability to like do them and like, or desire to do them. And that's fine. I'm just, want to alert people.
Putting all these ideas out there.
Putting it out there. Cool. All right. Well, I think that's good for this week.
Yeah. No, it's been fun.
Enjoy, and we'll talk next week.
All right. We'll talk later.
You've been listening to The New Rules with Alan Pentz. For more insights on mastering the new game, follow @Pentz, that's APENTZ, on X, and make sure to subscribe to the podcast so you don't miss a single episode. Thanks for tuning in, and remember, in today's world, you don't follow the rules, you write them.